Hello friends, welcome back to my channel. This is Srikant and today we are going to learn our fourth strategy in our series of videos in option trading simplified. So the fourth strategy, you have already learned three strategies in my previous videos, right? So I hope that you are already using it. If you are not using it, probably you might got an idea what the option strategies are all about, right? So now let us see our fourth strategy, which is it is pertaining to a like see the previous video that I made was when the market was anticipated to go up and you were bullish. Now what that market is bearish means the market is anticipated to come down. So this strategy will be applied when you feel like market will come down. You can go ahead and apply this particular strategy. So now let's see the option chain and understand what exactly the scenario is and when we need to apply this particular strategy. Same again, Nifty option chain, we have opened it and the spot price is trending at 18,000. Now consider that you have done your analysis and you have come to a conclusion that market is going to fall down and it will show a downtrend movement. So now I am bearish on the market, right? I am really bearish on the market. So I have to buy a put option. If I am an option buyer, I have to buy a put option. So which put option do I need to buy? Correct. You need to buy 18,000 put option. But my strategy says you need to buy 18,000 put option and 200 points away you need to sell a put option to give a cover to your buying put option. You need to cover it, right? What in case market reverses back? It doesn't behaved. It did not behave the way you thought. You thought the market will go down, but it reversed. And the market instead of going down went up. Then your losses would be huge. So to cover that particular thing, what we will do is like we will sell a put option as well. So we are buying a call option and we are selling a put option. We are doing both in this particular strategy. So this particular strategy is called bear put spread. This is called bear put spread. Bear means downtrend. Bull mean uptrend. So now this strategy that we are discussing now is bear put spread. So in bear put spread, what we do is like we buy an ATM put and sell 2 points below put option. And same as I told you in call bull call spread, the same thing you have to deploy the strategy Thursday at 3 p.m. for the next week's expiry. And the loss and risk reward in this particular strategy is very limited and it is very good strategy, and this can be deployed with a very low capital as well. So let us see in a video like how this strategy is going to work. Again, as I told you, Nifty is at 18,000 levels. So we are going to buy a put which is at a strike price of 18,000. Let's see guys. Let's see now. So Nifty 18,017. So the strike price that we are going to focus is 18,000. Here what I am going to do, I am going to select next week's expiry. Then I am going to buy a put option at the strike price which is ATM, and then 200 points below I am selling one put option, and this strategy the funds required is only 25,000 and the maximum profit next week I can get is 6,350. When I will get this? when the market goes below 17,927. Means if the market is trending going below 17,927, I will not be in loss. So this is the strategy which is you have to implement when you feel that market will definitely go down this week, right? So this strategy is called bear put spread. This strategy is called bear put spread. So the application that I am using to put this particular strategy is called Sensible. You can also use it. You can tag it with your broker and you can directly execute orders from here. Alright. So now, as you understood that market is going down and you are putting up this strategy. Now, after 1 day or 2 days, you have deployed 25,000 and after 1 day or 2 day, if you are getting a profit of 2,000 rupees, then you can exit it. No one has asked you to stay till the weekly expiry. This strategy says if you stay till the expiry and if the market is below 17,927, then you are going to get a maximum profit of 6,350 and the loss is limited to only 3,650. Right? It's a very good strategy if you feel that market is going down, that is bearish, and the probability of profit over here is 41%. Probability of profit is 41%. So this strategy you have to deploy. When you have to deploy? As I said, assuming, see, today is 10th of November. I have recorded this video on 10th of November. On 11th, the expiry happens. So 11th at 3 o'clock, you can put this strategy for the next week. Clear? Right. So now, why you have to apply this particular strategy? I'm just putting up a summary. I'm just summarizing this thing. Why you have to put this strategy? Because you felt or you decided as per your analysis that you have done on Nifty that market will come down. So you have applied particular strategy. Again, I am reiterating again and again in every video that whatever I am teaching you over here in this particular modules, video modules, this is only for educational purpose. If you want to take the positions as per the strategies, that is up to you. You can consult your investment advisors or you can get in touch with anyone whom you know can give you an advice on this and you can place the orders. But whatever I am teaching over here, it's only for educational purpose, which might help you to understand the logic and the technique behind this particular strategy. Hope I am very much clear on this, right? So here we go. So we have completed our 4 strategies till now. So I hope you people liked it. If in case you have any queries or questions, you can put it in the comment box below. I will definitely answer that and I will try to answer it to maximum. How many I can answer, I will definitely do that. And thank you a lot guys. And please do subscribe my video, like it, share it with your friends and relatives. And once again, thank you. Bye bye. See you again in my next video with the 5th strategy, last strategy. Okay. Thank you. Bye bye.